Hello and welcome everyone to Gold Asset of the Day for the 18th of August 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? First of all, in the last week, we have seen a 17% reduction in net long positions on gold from hedge funds and money managers. And of course, at the start of last week, we had that $100 move to the downside for gold, followed by a slingshot move higher, $100 breakout to the upside. Essentially, we talked you through this last week when gold was trading at $1,730 per ounce. Our expectation would be that we would hit $1,760 by the end of the week. We saw exactly that last week. In fact, we broke out to $1,779 per ounce. Ourselves and our clients at the Gold and Silver Club on Friday, we banked 2,250 points profit on our metal positions that we executed just last week. So in a matter of 5 days, for every one lot contract that you'd be trading, that's $22,500 of profit. And for every 10 lot contract that you'd be trading, that's $225,000 of profit. As you mentioned to you before, with volatility comes opportunity, and last week was a great example of a massive buy opportunity for you to capitalize on at the beginning of last week, which enabled us to build into a number of positions and incredibly low prices and really sniper in to capitalize on that subsequent breakout to the upside that we had later on in the week. Now, for this week, we're currently seeing the gold to silver ratio break out back towards 6-month highs. The gold to copper ratio is up 3% so far this week. The gold to platinum ratio is up 2.5%, and the gold to S&P 500 ratio is up 1%. So ultimately, that tells you that gold is outperforming many assets at the moment. In the last week, the breakout that we've seen to the upside just below $1,800 per ounce has meant that gold is still one of the best places to be in the short term. We continue to hold exposure on gold as we go through this week as well. Our positions have been protected with banked profits along the way, but we are still keeping a core position here on gold that we've re-entered into just last week. Now, this week, we do have some major news items to be aware of. First of all, we have Jerome Powell's speech on Tuesday, but more importantly, we have the minutes of the FOMC statement that is due out on Wednesday. That's where we are expecting further volatility. Over the course of this week, we're looking for a range on gold with resistance back towards 1,800. So we haven't hit $1,800 per ounce so far this week, but we're looking for a move back towards that level. But also, I wouldn't be surprised to see a rotation back down towards the $1,770 to $1,760 per ounce range this week. So I'm looking for a consolidation of a lot of the gains last week. Again, gold continues to outperform silver, platinum, also copper and the S&P 500 at the moment. We continue to see it get the safe haven bid alongside the dollar. The dollar index is currently trading at 4-month highs. It's back above the 93 zone, but gold is doing very well to continue to get supported even with the strong dollar here. So as you mentioned last week, our anticipation would be that that sell-off at the beginning of last week was a really fantastic opportunity for you to build out a position on gold, and that's worked out incredibly well. Again, what we've tended to see out there lately is a lot of traders getting delayed confirmation, particularly when the price broke out to $1,831 per ounce the previous week. Many traders get into the move far too late. They then get liquidated on a $100 move to the downside. They get their fingers burnt. They don't get back in the trade, and then they miss out on the entire move. And now they're having to jump in much higher here with gold, where gold's trading right now at $1,785 per ounce. So again, it comes back down to the understanding that technical analysis does not work. It's an outdated technique for the market. Many traders out there, they're taught that initially. It's very basic. You're literally still in kindergarten if all you're utilizing is technical analysis in the market. These days, you need a lot more data and intelligence to really capitalize on the current volatility in the market. That's where, of course, you want to be utilizing a research-driven approach to the market, trading the same way that the hedge funds, money managers, the banks and institutions are, utilizing statistics, data market intelligence, understanding of capital flows in the market, key areas of liquidity, alongside the daily, the weekly, the monthly, the quarterly cycles in the market. Marry that up to alongside fundamentals, macroeconomics, sentiment in the market, and of course you want to be aware of the intermarket correlations, the ratios, and alongside that understand how the banks, money managers, hedge funds and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.